How many times have I started the video by saying, what an important day? Well, what an important day across the board. Lots to talk about. Down goes the market, up goes the dollar, up goes yields, down go commodities, not in that particular chronology. Let's start with the market. So the S&P, bearish day, down 1%. The only thing it's got going for it is that it didn't close at low of day. And maybe you can say it closed within this ascending support. Just, to me, sell the rips. I mean, the day before, the 2 days before were better, especially the day before, this nice hammer double bottom potential. It went lower than the prior day. It closed higher than the prior day, ventured higher. So if there was ever going to be a bounce, it would have been that. It would have been today, Friday. But, look at that. Opened way lower. Okay, we closed higher than we opened, but otherwise, very bearish stuff. If it does rise next week, sell into it. Honestly, it's very weak. I think finally reality is starting to set in. And by that, I mean yields going up, rates staying higher for longer. What I've been saying the whole time, whilst this move was going up, whilst everyone kind of knew subconsciously this doesn't make sense, right? Especially if you look at the DAX, the CAC, the FTSE. I mean, these things are in new all-time high territory. It's absolutely ridiculous. At least there's a bit more reality grounded to the US markets, but still sell into this pot. Sell into it. So, S&P, that's the only thing that's got going for it. Closing within the ascending support. If it does rally a tiny bit, sell into it. Very bearish stuff, in my opinion. Nasdaq, I mean, it sort of copied the S&P. It didn't close at low of day. It didn't close below its last support. So for me, you can see these trend lines. We had one support, we bounced off it here. We came back down, we bounced off it again, and then straight away below. And now, basically, today we went and ventured towards its last support. And by that, I mean, before we venture into the abyss. I mean, there are some small pit stops we could get, this zone maybe that might have a little 1 or 2 day reprieve. But once we lose this, and we will, maybe we bounce a little bit, but sell into it and then down we go into the next zone. So for me, it's still a bearish market. It's definitely bearish fundamentally, but technically, yeah, bearish. So that's the Nasdaq. The Dow Jones, that also ventured and touched the last support zone before the abyss, if I can call the abyss now. The sort of the vacuum below the last support zone that I've identified in this range. But you can see we didn't close at low of day like the others. We did close pretty much at the second last support. What I think is going to happen, I think we might bounce a tiny bit if we do, because every time I say we could go up a little bit, but we're going to go down, the next day we go down. We don't even bounce. So although I don't like to think that things go up or down in the straight line, so we may actually have a small sideways move Monday, but I think the market is just looking to just go lower. It's starting to feel like aggressive selling is coming in. The fear. I know when there's a small move up, there's a lot more power to push it back down again. And that's all it takes for this market to go lower, because we are in a recession, in my opinion. The beginning, not even the beginning, the end of the beginning of a recession. We're starting to get to the middle of phase. We've been in this sort of bear market recession, inflationary spiral, if you want to call it that, for a year now. So it's not really the beginning. So phase two is usually the worst part, and I think it starts with a nice little drop. So for me, the Dow Jones, we could have a little sideways. We could even have a small move up, sell into it. We're going to go lower. So, but otherwise, didn't close at low day and close at second last support zone, but we will venture lower. Russell 2000, I don't really identify any support zone. That's why I didn't draw any. I'm not going to pretend there is one when I didn't see one. I think that it's better to judge the Russell if you want to trade the Russell, or small caps, for example, that are linked to the Russell more than anything else. If you want to trade those, then maybe just judge it by the Dow or the Nasdaq or the S&P. Once they find support, okay, then you can bet that the Russell will follow. But otherwise, to me, look at this descending support. Beautiful pattern to sell into if we do move up. Otherwise, I think it's just going to be lower highs, lower lows, just going down back to ascending support. So basically, fade any pop. The markets are weak. The VIX, slight disappointment. You can see it went quite high during the day, almost hitting 23, but closed much lower. I mean, far from its high of day. So you'd expect more from the VIX. I definitely did. But then again, the VIX is a broken indicator. I've been saying it every single video. You know, we broke out as descending. I still do think we'll get to 26, but by then the markets probably have dropped quite a bit. So you're better off shorting the indices than buying the VIX, if you know what I mean. But for me, the VIX is a broken indicator, but at least it was green. That's the markets. Let's check yields. I've been saying yields are the most important thing for a while before it became popular, you know, whilst they were sort of dropping. And since this day here, this is the 1 year. Okay, we were green today, nothing spectacular, but still just consolidating at new highs. You know, that's pretty bullish. The 2 year, however, this is just amazing. This is what the Federal Reserve has to follow. The Federal Reserve is now behind the 2 year, which means the Fed has to follow and catch up to the 2 year, which brings more power to the argument that the Fed will raise rates more than people think and hold them higher for longer. And this is 1 or 2 days from touching here and breaking higher. If you got the 2 year making new highs above here, I mean, where were we in the middle of November or the beginning of November? Actually, where were we in the beginning of November last year? Okay, we're just coming off our lows. The point is, you know, you can expect the market to, I mean, it needs to catch up to the downside, if I can say that. So this is just ominous stuff. For me, the 2 year being as high as it is, closing at high of day, you know, we're going to go sideways, we're going to go up, we're going to touch this. Once we close above 4.9, it's just, you know, that's where the system breaks. It's with yields, it's with interest rates, it's with all these zombie institutions and debt levels. This is what really is the black swan of all black swans. So, and it's the 2 year in particular. And this is a massive green candle and a nice close of the high of day. So you see more of this, you're going to see more of the drop in the markets and other things that we haven't seen before, you know, institutions going bankrupt. That's how it all starts. So for me, the 2 year, this is the most important thing of the whole day. And again, it's been happening for a while. And I've been calling this, you know, honestly, I've been calling this. So I'm happy to see it, but at the same time, it's a bit scary. The 5 year, just following the 2 year with 1 or 2 days delay, but that too will just go back up, test the highs, go sideways and go higher. I'll just delete these old notes, but I do agree with them. It's just happening quicker than I thought. The 10 year, same thing, just cup and handle, breakout of this horizontal resistance, up we go. That's also behind the 5, which is behind the 2. 30 year, which is behind the 10, which is behind the 5, behind the 2. Small lag. Otherwise, we're just going to create a little handle and break higher. The 30 is pretty important too. The 10 year, though, that's more important in my opinion. That's what most markets related assets are linked to, you know, houses, car loans, all that stuff. So if this goes up, it's also very damaging for the economy, and that just puts more into a recession. So yields up. I'm not going to go through all the global yields. I've told you already that I think they're all related. Look at the EU 10-year yield. This is just 1 day away. I mean, next week you're going to have this closing at a new high. That will also feed into the US yields going up, and that should cause chaos. Obviously, markets can stay irrational for quite long, but this isn't good. You know, the governments don't like to see this. This isn't part of the plan. This is, even though they sort of say that they want, you know, recession to happen, they want people unemployed, just ridiculous philosophy, upside down logic. But you can't want yields to go, you know, uncontrollably higher. And I think next week we have new highs in the EU yields and the British yields. Look at this massive green candle, close a high of day above resistance. Beautifully bullish. I don't think it'll take long until the UK government just has the same problem they had, which basically caused them to chicken out and to basically do a bit of temporary QE to bail out their pension funds. And that's going to return. Look at that. And, you know, under worse conditions, because there'll just be more debt. Look at the 30 year. That's unbelievable. I didn't even notice that. That's a massive move. The UK gilts really went crazy. They got smashed. Therefore, the yields went up. That's, yeah, that sort of reminds me of this period here. We could have fireworks next week in yields. Yields just remains the most important sector for sure. So I don't really need to reiterate. Yields up Very damaging. Economy down, markets down. Let's look at the currencies. So here is the dollar. Look at that. That's amazing. I was saying 105.5. We're there pretty much next week. We'll kiss the resistance. We'll probably close below it, then just maybe go sideways a little bit. But once we close above 105.5, especially 106, just to really confirm it, then we're going to move up to the next 108 zone. I do think we'll get quite a lot of resistance on the way here, so it's not going to be that easy. But, you know, for now, I think we can clear 105.5. And as the dollar goes up, especially with yield, the market goes down. And so do commodities, which I am into the most. So great opportunity to add. Maybe not yet, just scale into it. I think the dollar will go down long term, but this is just, you know, providing us a gift to slowly add to our positions long term. At least that's what I'm doing. If we look at the euro US dollar, it makes sense. Dropped a little bit. I think we've got support here, but I think we will venture down here. That'll probably equate to the DXY at 105.5 or maybe even 106. So we may have some sideways action here, maybe even a small bounce, but I think we'll close below and we're going to see the euro dollar go back down again. US dollar, Japanese yen makes sense. Dollar's up. Look at this. We never lost ascending support. Maybe go higher. Let's say 138 at least. That should equate to the DXY about 105.5. The pound, look at that. Lower high, lower lows, close near low of day. We've got a little ascending support coming along here. This is the last line before the void. You know, do we hit that and maybe bounce a little bit? That probably also equal 105.5 and then close below it. Back down we go. This little hurrah here, because remember, the pound got crushed. I mean, the pound equaling $1 is just, in my opinion, unthinkable. And we were basically there. And I think we're going to return there soon, actually. Not straight away, but we could start to move back down. So all of that translates to the DXY going up to 105.5, which we could hit next week on Monday, just like yields could close at new highs on Monday. And if it's not Monday, it's Wednesday. The point is, it's starting to get scary. Not the DXY, but the yields. I got to reiterate the yields. But the dollar goes up with yields. Let's look at commodities. Copper, I said, down we go. And down we went. And look at this. I said there's a sort of a 3-point trend line that coincides around here. You've got $4 essentially. You've got this support zone here, okay, which is maybe just below 4, but let's call it 4. You've got the ascending, which is at 4, and then you've got 4 itself, which is a psychological number here. Where did we go? We closed below 4. We closed at 3.95, which means we're going to go down here, which is what I wrote. And again, it's just happening quicker than I thought, which I like because I'm slightly impatient. I like some quick excitement. So where do I think we go? We just go back down to this support zone straight here. I think you can put a fork in this. Copper's, I don't think it's going to rally back and make highs here. No, we're going to go sideways and we're going to go back down. So copper down, it goes with the market, which makes sense. And down it goes with the commodities, which also makes sense. Although you can see some commodities were green, but I think that's independent to the general commodity direction. So commodities down with yields up and dollar up, especially dollar actually, and market, because copper is sort of Dr. Copper correlates the market. So this totally makes sense. It's just happened quicker than I thought. So I'm looking for 3.75 and lower eventually, by the way. Let's look at gas. Gas, beautiful, totally oversold. I said it could go up even if the markets go down because it's just oversold. I think when you get this oversold, you don't really care what's going on in the general economy, markets, or, you know, worldwide. I think this just needs to get up. It's been oversold. So first resistance to take out is this zone here. I'm not going to zoom in too much, but you can see it's around 2.65. Let's close above. Let's say 2.7 just to be sure. We may have a tiny bit of resistance. You may have a little sideways day, but I think this is going to, I've said it, you know, scream higher to 3.5 at least very quickly. You'll have these shorts covering. You'll have momentum traders, algorithms. You're going to have, it's going to be a real fiesta. So I think once we close above, let's say 2.7, it's on. So very excited about that. This is well overdue. I'm not in gas. I'm in one gas related stock, but I feel like, I don't know. I got pretty tied to this gas trade because I did say it was a buy at 4, which is way too early. Wrong. and then 3.5. And then I said, wait for 2.5. And here we are around 2.5. So, for me, my average, if I was to have played it, would be around 3.25. I've said, we're going to get to 4 or 5. I said in months, but to be honest, things can move quite quickly. I think we'll be at 4 in a few weeks. But natural gas, basically very bullish, especially when you've got total collapse going on around you with the dollar up, yields up, markets down, and natural gas is up 5% after being up 7% yesterday. That sort of suggests we are way oversold. And if we do drop, it's a buying opportunity. So for me, natural gas is still bullish. Oil, I didn't follow the oil market too much today. Obviously, we have strong support around here. It's getting to a tight pennant. I mean, I don't want to add more lines because it's pretty clear where support and resistance is. You could start to add extra wedge lines like this and say, okay, we're getting to a tight little pennant. There will be a bit of a decisive moment to come soon. But I'm not going to draw this. It's just forcing. I think it's already pretty clear where support and resistance is. So if we do flush, I think there's a bit of buying that will happen just below. Even if we take out the stops here, I think it will come back up. So I think you're pretty safe to buy in the very low 70s. But, of course, we could have a drop. We could have a drop. And if we do, look at this support here. Beautiful ascending long-term support. Very credible to me. Mid 60s. Also, it's a sort of stop triggering buy. You'll have all these institutions that seal the stops just below 70, 69, 99, 69, 93, whatever, and stops at 70. And as soon as it gets hit, bam, you'll have a massive tail, just comes and then just be eaten up and come all the way back up. You could have a crazy candle here, like a hammer. You could even have a green close. But I think that you buy low 70s. If you want to start a position and you really want to be in oil and you're not in it, then maybe first buy here and then buy this flush, in my opinion. But yeah, we could go lower with commodities getting crushed generally, with the dollar going up, yields going up, market going down. I think oil should be higher overall long term anyway because of geopolitics. But you'd expect it to be high already. Look, China's reopened. That was one of the excuses for oil going higher, but it didn't happen. So you could get a low, but still, I think opportunity to buy. Oil, like all the other commodities for me, are long term buys anyway. But you could get it cheaper. So that's oil. Now let's look at gold and silver. So happy about this. I was saying 1830. I bought that zone and I'm not buying until 1800. I don't know. Do you want to call that sort of target achieved? Maybe not. 1809 is normally that would be the same as 1800. $9 is the same as zero when you're talking big numbers like 1800. So we basically achieved the support. The only thing is I still can see the dollar going higher. I can still see yields going higher. I can still see the market going lower. And moreover, we closed at low of day. So for me, gold can still get a little cheaper, but you're really risking it here if you want to buy the $1,800 range like I did. Like I want to. I didn't actually buy anything today. So I just didn't have a chance to be honest. But I do also think I'll have an opportunity on Monday, and we closed at low of day. So I'm very happy about it, but I didn't buy it. So we'll see on Monday if that was silly of me. But I'm very happy that this move has happened. I haven't actually decided on where it goes lower because I didn't expect us to get here this quick. But I think I'll have a chance to do so this weekend or even on Monday. I don't think we're really going to go lower than 1800 on Monday. I think we'll sort of venture there, maybe go to 1793, come back up above 1800. So for me, 1800 is still the next support zone that we haven't tested yet. Silver, however, went below my target. So very happy to see that. My target was 21. And here we closed at low of day. Look at this ugly candle. Low of day being down 2.5%. So that's amazing. Very happy about that. Next zone of support is the ascending line. I do wonder whether we'll actually find support here. Because again, we're going to go and test 1800 with silver, with gold. And when we do, you'd expect silver to also go down. But I expect gold to find support pretty quickly. $9 in gold of a drop is not that much. Will probably equate to around here in silver, which coincides with this low and also this low, by the way. So I just feel like 2050 could be the low because we need a bounce here. This is a little overdone. I'm very happy it's done, but I think it's a bit too much. So just as I don't like to get taken with the excitement over here, I know there's a lot of excitement over here. Trust me, you know, when you're part of these gold and silver bug communities and everyone's just talking about $50 and new highs, 2000 gold, it's hard to sort of ignore it, but you get used to it. And also, it's a contrarian view when you see everyone just screaming. That's also a sign that there's too many people on one side of the trade. So, but it's nice to have a bit of patience and to be rewarded. So, again, though, I do think we go a little low on Monday just because we closed at low of day and just because gold hasn't tested 1800 yet. So, I'm just going to wait for that extra little drop before buying the miners, which I'll go to now. What I will say about the miners, though, is that they are a lot more bullish than the metals. And I don't like how many lines I've got. So I'm just going to clear this up. This line is now obsolete. Even this line, I'm going to get rid of. We've passed it already. I'm going to get rid of some old ones just to clear the chart up a little bit. Okay. So for me, you can see already we kind of followed the markets more than the metals. That's number one thing I'll say about the miners. It didn't close at low of day. It wasn't some massive red candle. It was sort of closing near, I'm not going to say high of day. Yeah, closing near high of day if you ignore the gap. That's kind of bullish. Also, we've come down a tremendous amount and we're basically at support. You can see what I mean by support. We've just retraced the whole move higher. All right, I don't want to get too precise with the trend lines. You saw I had too many open already. Basically, this entire range here, let's just say this zone here is support. All right, you can see we broke out. There was also kind of this area here we back tested once or twice, but this entire zone, I'll make it even bigger. This entire zone here is support. We are there. So if gold and gold goes down a little bit on Monday and silver also, like I just went into, maybe you'll have the GDXJ just test around here again. That's kind of the same thing as testing all the way down here. We're very close to extreme support zones where you have just, you know, the ascending support. You have this line here, and I don't even think we're going to get there. I also think we're due for a bounce. And this, I need to clear this up to be honest, but this descending line here, if I go to the 15-minute chart, maybe it's more obvious. See this descending line here. I expect us to break that pretty soon. Even today, we almost broke it. So if we do go lower on Monday or Tuesday, I just feel like we're very quickly going to pop our head above this. And it's at that point where you get yourself a nice 5, 6, 7, 8, 9, even 10% rally before going back down again with the markets. Again, if the dollar goes up, yields go up, it's going to be hard to sustain that kind of move. But I just feel like I'm going to be getting a bit too greedy, expecting it to keep going down because I think we're going to have days where, I mean, even maybe on Monday where gold's down $9, silver's down, 30 cents, but the miners are green. And by then it's too late to add. I mean, it's never too late. You're still going to get a 5% move, but I think that's what's coming. I think the miners are so overdone. They're due for a bounce. They're due for a bounce. So I may even try and buy after hours here. I was out actually tonight, so that's why I didn't buy. But yeah, I think my point is we are seeing strength in the miners relative to the metals, and they are following the markets more, but I just feel like they may even go green if the market's red. They are, independent of every other sector, oversold. So I bought at 1830 and I feel like I'm going to have to buy now and make that equal the 1800 zone on gold. So that's the GDX. GDXJ, very similar kind of candle. Look at that close a high of day. It's still a red day, still down 1%, but close a high of day. And okay, we're below this ascending support, but still it's just overdone. And again, I feel like we're going to break out of this descending line. So I feel like, and look where we are. We're at this line here. We went underneath it temporarily today. So I think you can say this nice drop of about 20%, even more at one point today. I think it's due for a bounce now. So miners, I'm going to say I'm bullish, at least for a little bit of a percentage move, maybe even how much of a move, let's say from here. Yeah, between 5 and 10%. So I'll end with Bitcoin, and I'm going to do more videos this weekend. I want to get into some specific stocks, some specific cryptos, but I want to keep it very light because today was important. I don't want to, get lose focus elsewhere. Bitcoin followed the markets. It underperformed the markets, if I can say that, but the markets are pretty crazy. We did touch this little zone here, which used to be resistance over here, kind of act as a support here. You can see a lot of sort of closes above this zone, and we tagged it today. I think now, especially after tagging it, it's no longer support. So I'm going to just say that it's all about this ascending. I said if we close below this ascending, it becomes bearish, but we haven't done that. In fact, we were nowhere near even tagging it today. So Bitcoin, the crypto current market was red today, but still not bearish, especially not like the market. So, but again, as the markets go, Bitcoin will go because Bitcoin is really still one of the more speculative assets out there. And these are the type of ones to get taken to the woodshed and butchered. So just like those high risk stocks out there, the AMCs, the BBBYs, all the sort of day trading havens, they'll get destroyed if the market goes down. I think Bitcoin will not survive that either. But for now, it's not bearish. Lots to look forward to next week, honestly, especially yields, especially the dollar. And then, yeah, the markets and commodities and crypto. So very exciting stuff. I'm going to make another video, maybe not tonight, but during the weekend. But I hope you guys enjoyed the slaughter. More to come. And I really do hope that the content was valuable because I think I did kind of talk about this move happening. So I hope you appreciate that too. I'm definitely happy that I had a lot of sidelines because I've got more than 50% of my portfolio in cash, and that's aggressively defensive, if I can say that. Having 50% in cash, you're happy to see smashes like this. In fact, you're probably wondering why you weren't 100% in cash, but that's a topic for another day. Anyway, I hope you enjoyed it and I hope you didn't get slaughtered out there. Yeah.